welcome back. Thank you so much for staying tuned in. Well, let's get you some more stock-specific update, and let's start by getting you the list of stocks that you should keep on your radar bright and early this morning. Jinay is standing by with just that list. Jinay?
Well, yes, HDFC Bank will be the first stock to keep your watch out for, as company has given approval for the initial process of IPO of HDB Financial Services, and this is with a fresh issue of aggregating about 2,500 crores. Moving on, KEI Industries will be in focus, as company successfully commissioned commercial production of LV/MV cables at the new plants in Rajasthan. Moving on the back of order wins, BHEL will be in focus, as company bags order worth around 6,100 crores from NTPC. This is for thermal power project, and KEC International wins about 1,000 crores orders for their various businesses. Moving on the back of US FDA inspections, first Dr. Reddy's will be in focus. US FDA has completed inspection at the R&D facility in Hyderabad and issued the inspection with 0 observations. Moving on, Glenmark, US FDA has issued Form 483 with 0 observations after inspection of the formulations facility based out of Aurangabad. And lastly, Biocon will be in focus, as US FDA has issued 3 observations after inspection of an API facility based out of Bengaluru.
All right, thank you so much for that, Jinay, for outlining the stocks that are in focus on back of the news flow. But which are the stocks that have been focused on back of brokerage note? Gaurav is standing by with that list. A very good morning to you, Gaurav. And which are the stocks to watch out for?
Well, yes. Let's begin with Indus Towers first, because Citi has now maintained its buy rating at a target price of 500 rupees on this stock. What they say is that the recent dip is actually an opportunity for buyers to buy in Indus Towers, and the reason being that the quantum of past dues for Vodafone Idea can actually increase in Q2 FY25, but at the same time, if you look at the dividend yield of 6 to 7%, now Citi believes that is an attractive, given that the valuation of Indus Towers is at a attractive level. Next we have is Glenmark Pharma once again, and now Investec has maintained buy rating at a target price of 1900 rupees on this stock, and they have also initiated fast long on this stock. The reason being that they expect earnings momentum as well as the cash flow generation to actually improve from here on. They also believe that the Aurangabad facility with 0 observation is actually a good thing for company. And lastly, they also see Glenmark's India as well as rest of the world business increasing at an exceptional pace. Apart from that, let's also watch out for Chola Finance, because Investec has now upgraded the rating to buy, and they have also hiked the target price to 1850 rupees, because what they believe is that the loan growth is not a concern for the company. There are certain levers which will help the company to maintain ROA. When we talk about buffers, they are limited for the company, but at the same time, they are expecting Chola Finance to outperform the sector, and as a result, we are seeing that they have hiked the target price to 1850 rupees. So definitely watching out on all these counters on the back of the brokerage note that we have received today.
All right, thanks, Gaurav. So those are the counters that make it to brokerage radar this morning. But ICICI Bank will also be in focus on the back of commentary coming in from their management meet. Then Citi has gone ahead and hiked the target and maintained the buy stance. Gaurav, tell us a little more about that as well.
Well, yes, Citi met with the management of ICICI Bank, and now they have maintained their buy rating, but also hiked the target price to 1547 rupees versus what it was at 1464. And the reason being that management have now said that the growth momentum is likely to sustain to mid-teens, and this will be led by business banking, MSME and corporate loans. Apart from that, bank has also highlighted that they have comfortable LCR ratio of around 123% and LDR ratio of 85%. Other than that, they believe that the NIMs are going to be range bound at least in Q2 FY25, and we may see a little moderation that we have seen in the past trend as well. Lastly, they also believe that they are going to focus on the cost efficiencies. OPEX growth is going to get slowed down, and that is the reason why we may see some increase in the profitability for the bank. And as a result, we saw Citi has now hiked the target price to 1547 rupees after management meet. So definitely watching out on this counter on the back of the price hike that we are seeing from Citi.
All right, thank you so much for that, Gaurav, for outlining that as well. Apart from ICICI Bank, you also had M&M, the management that met Goldman Sachs as well as BofA, and commentary coming out from both of these brokerage firms on Mahindra and Mahindra. What they're saying that XUV 700 is more affordable variant, supporting the profit growth for the company versus the recent strategy of only focusing on high-end trims. They believe that the battery-operated EVs, that BEV, will become the launches in that segment will be profitable from day one onwards. What else is the management hopeful of? One is that there's improving validation on the Inglo EV, in some cases from other OEMs as well. They've got a good validation for that sort of a platform. They're saying the green shoots are now more visible in the rural markets, but it's not come back to those rosy levels that it has seen in the previous cycles. Apart from that, they're saying that the tractor market setup is looking better heading into the H2 of the financial year. They believe that the Thar Rocks test drive will be opening in mid-September, already opened in mid-September, and is seeing good level of interest coming in from consumers. Export plans are starting with Australia, South Africa as well as Chile, and global pickup in the truck market as well. They're fairly positive on the growth outlook in the second half of the FY25, and also management has reaffirmed the FY25 guidance of about 5% year-on-year growth for tractors and mid to high teens growth coming in for their SUV business. So management sounding pretty positive on the growth path going ahead at least, and that's what Goldman Sachs and BofA has highlighted, Shreyansi.
Well, absolutely, and let's move on and let's get you some important commentary coming in then. With an impending macro slowdown in the developed economies of the world and the dollar on a weakening trend, what does this really mean for the commodity space? Well, market guru Chris Wood believes a weak dollar augurs well for the commodities pack. But let's also go across and listen into what he then had to say about not just the commodity space, but also the long-term India equity story.
Commodities, and it's interesting in many ways that the commodities have not been weaker given how the very depressed data out of China. So I think another key variable for commodities will be the dollar, and my bias is that the dollar has commenced a weakening trend. The dollar is already down quite significantly from all-time highs against Asia and emerging market currencies. It's down quite significantly now against sterling. A lot of people were looking at the dollar vis-a-vis the yen, but even there it's now down a bit. So fundamentally, I think the dollar has begun a weakening cycle, and a weaker dollar is positive for commodities. So on a 5 and 10-year view, I still believe India is the best stock market opportunity in the world. On a short-term view, India is not going to be the short-term flavor of the month because we've begun a Fed easing cycle, and the other emerging markets, such as Brazil, is a good example, who are more geared into declining US rates. In my relative return portfolio, where I'm running portfolio on a relatively short-term tactical basis relative to the benchmark, I'm running India marginally above neutral, and the key reason for that is that India's neutral rating has increased dramatically, which is also why we believe global emerging market investors are now a little underweight India. But in my long-term or my more long-term orientated global portfolios, I have much bigger weightings in India. So my Asia ex-Japan long-only portfolio, which is about 25 concentrated stocks, I'm still nearly 50% invested in India. So this neutral weighting is just a tactical call, given we've got very high valuations.
If you like this video, then like, share and subscribe to ET Now.